Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Paris Rapeseed. The move up from the support of the extension to the neckline, currently at 442.5, of the May to August 2025 Head and Shoulders continuation pattern, well, that failed 3 times. Once in late October, and again in late November last year, and then in late January this year, at the same roadblock. The dark blue neckline extension, currently at 485 even, of the August to September 2024 reverse Head and Shoulders bottom. In early March, it looked like it was going to be a 4th failure to ascend, but the prices instead shot up 2 Fridays ago, and the following week pushed up over resistances at 491.75, the July low at 497.75, and even the resistance at 504.75 in the process, filling in the gap from June last year between 500.25 and to 505.75. Since then, prices have tried to stabilize over the dark blue neckline extension, but seem to be making a bit of a meal of it, as it is unclear if the action is forming a possible triple top or halfway hesitation, mainly between the July 21 low and the dark blue neckline extension. So it was all as I said 2 weeks ago when I said, and I quote, "Now, this dark blue neckline finally give way, should this dark blue neckline finally give way, and there is no guarantee it will, even now, should it give way, then the pent-up bullish forces below may well push straight through the July 21 low above at 497.5 and surge on upwards to try and fill the gap seen back in June last year between 500.25 and 505.75, maybe even up to what would be some pretty significant congestion dating from September 2012 between 513.75 to 519.5. It would be interesting to see if this comes about." End of quote. And we've had something like that. So what else can we see? Well, I've drawn today an unhighlighted start of January to start of February bullish Andrews pitchfork to perhaps show the bullish angle of attack. The reason it's unhighlighted is because the lower tie, currently at 490.75, has been, well, basically beaten up quite a bit, and thus its integrity is somewhat questionable, despite it's pretty much showing the bullish angle of attack along recently with the middle tie and above, currently at 507.75. I'd keep a wary eye on both of these ties, but look perhaps more closely at how and if the market can stabilize over the dark blue neckline, and what subsequent pattern evolves from the action seen to make that happen. Winnipeg Canola. There have been a number of patterns that have developed here, some indeed most directly affecting or at least influencing the market. So there's a difference between directly pushing a market and generally influencing. The recent rise started with the double bottom formed over December last year and January this year, and around the 50% absolute Fibonacci line at 606.90. This led to the first pattern, the bright green December 25 to January 26 today ascending expanding wedge pattern, still operational. This is currently 714.10 to 769.90. As I say, this is still operational today despite a breach higher last week. Within that pattern, we had, or have, maybe had, an earlier February, possibly to date, possibly even to date, dark blue small bull channel. That's currently 702.10 to 721.10, which showed the way higher after triggering the bullish halfway hesitation seen in early February. This is the pattern that might be influencing rather than directly affecting the market, as prices broke higher out of it 2 weeks ago. But this week, along with the excellent bright green lower trend line, it may have eroded the bearish pressure. We shall see. The next one is the bright red neckline extension to the October 23 to November 23 reverse head and shoulders pattern, currently 722.60. I said about this resistance 2 weeks ago, and I quote, "This is the next immediate obstacle overhead. However, I do not think it is that much of an obstacle, especially given recent market moves. Thus, I think we need to start looking at the 2025 high made back in June last year at 751.70 and see how that develops." End of quote. Well, those words were very prescient, as that 2025 high eroded the high last week and has capped markets this week. I'm still not keen on this bright red neckline, but for now I will leave it there. Finally, there is perhaps the second most important immediate pattern, but which may turn out to be the most important longer term pattern here. I spoke about it 2 weeks ago when I said, and I quote, "I've also drawn in the meantime a March to December 2025 bullish Andrews pitchfork. And I think the middle time, currently at 775.20, which is close to the earlier all-time high made back in 2008 at 770 even, I think this middle time may become important." This one is highlighted in bright pink. No times have yet been tested on this, bar the lower time back at the start, and that held, but I still think this may become important in the future. So please keep it in mind. Bursa Malaysia crude palm oil. To start with, as I've done for most of last year and now into 2026, I'd recognise the wide congestion area that was overhead, but now may be becoming a support of sorts between 44.08 to 45.59. I knew I had to keep that in my commentary for some reason, and it's been very, very relevant in recent times. We tried in mid-October last year to pierce it and failed, with prices punching back down through the lower edge of this congestion as we exited October. This congestion area is one to remember despite the recent action slicing up through it, like a hot knife through butter. The reason for the strong rise is another congestion zone developed, this time below, between November 25 to February 26. In fact, it was 3 bands of congestion below, made up from the lesser Fibonacci line at 40.26, then congestion at 39.86, and the February 2011 high at 39.53. These 3 eroded the bearishness, and after a failed attempt higher in late January, which ended in a V-top, we had a quite decent small February base double bottom, Adam type. I said on this 2 weeks ago, and I quote, "Thus we have for this pattern a primary target X in the 42.69 area, just under the combined resistance of the 38.2% Fibonacci line of the May 20 to March 22 move, and the 50% Fibonacci line of the May 23 to December 24 move, both at the same 42.74 level, and the secondary harder to reach target X1 up in the 43.12 area, close to the highest seen in January this year at 43.20 and 43.22. End of quote. Both these targets were reached 2 Fridays ago with a gapping move higher that peaked last week and again just under this week under the dark blue neckline extension, currently at 47.33, with the big old September 2015 to November 2017 head and shoulders top. Thus we are now starting to establish over that 44.08 to 45.59 congestion, but are being capped by the dark blue neckline. The question here is, what pattern is the market forming? Is it a topping action, or is it some form of halfway hesitation? We shall see. Now, there is one further pattern I would like you to consider, and it is this. Is the whole April 2025 today action, is it a really, really, really large double bottom, or even a very, very, very large big W pattern? On this, I'm not sure as yet, but I would rather ask the question and look silly than look even sillier later on when it may happen. So please watch this space.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.